Welcome back everyone. So we're going to go through some examples of ranges and expansion on the charts, because seeing it on diagrams is good, but seeing it on the actual charts and how it actually moves is the most important part. So as we learned previously, where a range is a period in the markets of calm price movements and sideways price action. So a range is pretty much this, where we can identify a high and a low. Expansion is going to be pretty much the opposite, where we see price moving aggressively in one direction, whether that be down or up. Okay, simple as that, and that is what we have here. Okay, so let me just zoom in. Alright, this is exactly what we have. Okay, so I'm sure you can see that the range is very clear. That is the range. So you can see we're moving sideways. Nothing is happening. We're not aggressively moving up. We're not aggressively moving down. We're just moving sideways. So what we are doing in this phase is building liquidity. And if this has come after sort of an expansion down, or price printing a lower low, lower high, like in this example, where we have lower low, lower high, what we can identify that as is price filling liquidity or rebalancing any areas that was left in this move. Okay, so in this example, we don't really have any areas or any visible obvious areas of unmitigated supply, but we do have the lower low, lower high. That is our continuation phase, followed by the range building liquidity. And if we look at how long this lasts for, if we take, so that's the lower low, the range starts here. So we look at from where it starts to where it finishes, 2 days, 13 hours. Okay, so obviously this can't continue forever, because if it continued forever, then it would just, there would be no progression ever. It would just continue, and that is not how the markets move. They move in ranges for short term, expansion for short term, ranges short term, expansion short term, ranges. Okay, that is what, if you go and look at the charts. So a bit of homework for you. So for this video, the homework is to go through just what I'm doing now on any time frame, literally the 1 hour or lower. And I'll say the 1 hour or lower because that is how we trade, from the 1 hour being our highest time frame. But the decision's yours. Go to use a time frame, any pair, literally any pair you want. Maybe start with Euro USD, because that is the main pair in which we trade, myself and the community. And then the homework is get a chart up. Obviously you don't want anything on it apart from price action, and just use the highlighter tool or the pen, I believe, whatever, and just mark on where you see price moving sideways and where you see the expansion. Just what I'm doing here with highlighting. Okay, and I want you to do that. Like I say, any time frame, not really seconds time frame, just use sort of these time frames and just mark it on and just go through it. Okay, because once you understand ranges, expansion, you can then look at it as refining to areas of supply and demand. And that is essentially what it is when a range is being built, and then we get an expansion down, which causes a break in market structure. What we'll have is an area of supply that's formed, and what we can do is trade from that area. Okay, basically like that, and that's what we're getting to now. So what we can see is, obviously, like I just said, that's the range. Now what we can do from a high and range, from a range, is identify a high and low. Sorry, so that's the high and that's the low. We can mark that on. We can use that as the high. Okay, so that's the highest point, that's the lowest point. and obviously that's the lower low, that's the lower low, that's the lower high, that's the lower low, that's the lower high. Okay, expansion. What am I doing? We want that tool. Expansion, range, expansion. And what we can also do, let me do that again. So we got expansion, range, expansion. Now a little exercise I like to do is just take that away from price. So I've used the path tool, and obviously the live markets are not going to be, you know, beautifully perfect. It's going to be like this, but obviously we can take the idea of what we're looking at and use it. So this is what we have. So that is the expansion. That's the bearish expansion down that put in that lower low. Oh, trading view doesn't want to work today. Lower low, lower high, followed by the range. Now a range and a pullback can mean the same thing. So as we put in a lower low here, this move back is basically the pullback, and it's more times than not it's coming into a good price, a premium price, before it wants to either sell off again or, you know, do what it does and go up. And a range, just to note, does not need to be perfectly moving sideways. It can be, you know, gradually moving up, down. In this example we do have price, you know, moving up, but what we can identify is that it's corrective. Remember, look, it's calm price movements, and it is pretty much sideways. Okay, compared to that, it is sideways, and compared to that. Right, so what I can put on is right, there we go. Expansion phase to downside. Okay, that's the expansion phase, which is followed, as I've just said, range, or let me put followed by the range. Yeah, just put that, followed by the range, and obviously that's that area there. But then what we have next is just the same thing, where we have the next expansion, which is more visible on our price chart because of how it breaks. And then we can just emulate that over. Now getting into the next sort of step would be supply and demand, because one thing we need to understand is we can get an expansion up that doesn't form demand. It doesn't need to form demand. For us to have a valid area of, well, supply, it needs to break a significant low in the market. Okay, and that's what we have here. So that is our low, and what I'm going to mark on is BOS. Okay, and what that means I'll show you here. So BOS equals break of structure. So what we have is a lower low, price is put in structure. This lower high is not confirmed to be here until that lower low, until a new low comes lower than this. And that's what we have here. So we've got a lower low that's now confirmed that the second this was broken, and it's a break of structure. It's put in a new lower low. So what that means is, if we're looking at this as the range as we marked on previously, it's also an area of supply. So what we can do is either trade solely from this range, or use the lower time frames to sort of gather our entry. Or what we do with how we trade is we will identify where momentum has stepped in, and that would be in the form of giving us supply. So something like this. So what we've basically got is a supply, and we know that this is the expansion phase, so that means it's shown momentum down. So we can take that and we can say, right, where has momentum stepped in? Was it here in this expansion phase? Was it here? We know from that example above that we'll get into in a second, it was up here. So what we can do is refine it to the last candle before the aggression came in. So I'm trying to go slow and keep it all very simple because I don't want to go too fast. I know if you're new, it can be a lot to take in, but momentum steps in. We want to identify where momentum steps in, and then what we can do is, look to trade once price comes back in gradually. So something like this, and then that is sort of what we would be looking at. So we've got, let me just mark it on. So we've got area of supply, and is where momentum came into market. Okay, so that's our area of supply, and this was all caused from the expansion down. So key tip 1 is we want to see for a valid supply zone, so note this down, for a valid supply zone we want to see momentum. Now ideally we want to see momentum on the break as well, because that will up the quality of that supply zone. Key tip number 2 is we want to identify where momentum stepped in, and that is where we want to be looking at price delivering back into like this, and then trading from. So something like that. Okay, something like that. But if we get into it on the chart, because diagrams are all well and good, but what we want to see on the chart, let me just show you now. So exact same thing, that's the range, low and the high of the range, but we can take it a step further and look at that. That is where momentum stepped in, and that is our area. So this is what we call the last buy before the sell, and I have in the next few videos we're going to get into that for a full video on itself. But the last buy before the sell basically means that is the last up close candle before the aggression stepped in. So it's mainly that candle that is showing the expansion, but the move started from that candle. So we take the candle before, which is there. That is our area of supply. Our range is still here. That is still the range, but we can refine it and have a tighter area of interest basically. Then we can see what is price doing now. Ask yourself what price is doing. So we've expanded down. Like I said previously, these phases can't last forever. This range didn't last forever, it lasted 2 days. This expansion didn't last forever, it lasted 2 hours. And now we're ranging, we're trying to rebalance that move and fill this liquidity. And that is what price does. So we come in with that candle, and then what we would be doing with the way we trade in my community is looking on a lower time frame inside of this zone for our entries, and then the target would be the low, and then you can see price takes the low there. Okay, so it's pretty straightforward, where we have expansion, range, also correction, expansion, range, also correction, mitigating, and then that is then the continuation phase. But if we take it a step further, obviously we now know that price has put in that new low, okay? But what if we are going to be looking from the low to the high? Obviously this would be classed as the expansion phase, but it's the continuation phase. We're not going to have every single candle in here expanding. So what we can do is take it a step further and refine it and think, right, so that is the low, that's the low there. So what's caused that to break? Is it that? Or is it up here? Or is it down here? Well, remember, ranges and expansion happens on every single time frame, so it's here. So what we can see is once we came into our area of refined supply, we then started to push down. Okay, we've got a range, sideways price action, expansion, and this would be seen better on a 15-minute time frame. But we've got sideways price action, 1, 2, 3, 4, 5, 6 candles. Then we push down out of that range, expand, and then we've got 2 candles, 1, 2. So this would be on a 15-minute time frame. That would be a range. So that this bit of price action on a 15-minute would look like this. Okay. And then what happens next? We expand. So range, expand. So that's caused the lower low to be printed. Not up here, not here. It's been caused by here. So what we could then do is, again, we look to see where momentum stepped in, which would be, we take the last buy candle like we did here. Last buy candle, but again, take it that step further, we can refine it and look at that doji candle. So a doji candle is, so that's the wick. Let me just make it clean. That is the wick of a doji candle, and then the body is that. Okay, so basically we've got a small candle body, large wicks. So high end of the candle, low, that's the body. Okay, so it's showing indecision basically. That is this here. So it's not showing momentum yet. So what we can do is again refine that to there. So we've got a tighter area of interest. That makes sense. Range, expansion. So it wouldn't be silly to be looking at this as our POI to be trading from, and then something like that. Okay, and that's just goes to show how the markets are fractal. As I said, ranges and expansion happens on every time frame, and if something's going to happen on one time frame, it will happen on another, just at different times. And that's what fractal basically means. It's just price repeating itself. And once we understand that sort of concept of fractal, it enables us to use these time frames. If the markets weren't fractal, we wouldn't need to use these time frames. Not really, because we can just use one time frame, look at our areas, boom, that's it. But no, we can use these to gather, sort of build our bias, refine, enter, manage. Right, so before we get into the example of demand zones, I'm going to be looking or talking you through sort of this bit of price action and how it's moving. Okay, so I'm going to just start from here. Now remember, that's a range and that's an expansion. So what we can see is we have sideways price action. What's it followed by? Expansion. This is moving sideways, that's moving down. Remember our rules here, okay? And then it's followed by, so we've got a range, expansion, followed by a range, which is also a pullback from this lower low. Expansion, which is not as aggressive, but it is still expansion. It has put in a lower low, followed by a range, followed by expansion, followed by a range. And then what I'm noticing with price here is it's failing to go lower, meaning momentum to the downside is now either stopped or it's sort of slowed down. And obviously we can see if we look at price, it stopped. We've got a sort of, I wouldn't class that as an expansion because it's a wick. If we have an aggressive move up, but it's a large wick and the candle body closed here, so something like that, that's not showing momentum. The idea with momentum or expansion is to show momentum. Then we know money stepped in, larger people of interest have now entered and caused the shift in this market to move. But if we continue, that's the range, that's the expansion, that's the range. That would be a lower time frame expansion. I know it's just one candle, but on a 15-minute time frame, that is an area of demand, and you can see price comes into that area of demand, mitigates in the form of a range, and then what's next? You guessed, expansion, which then sort of expands down, but again doesn't cause anything to shift or break. It's just one candle followed by a range. That's the range, and no real expansion visible here, because when we're just looking at price and the high which was there and the low which was here, it got broken there, but look how it got broken, in the form of corrective and calm price movements. So what we can identify is price just continuing to range. This is just one entire range until price either expands down or expands up. In that example, we can see it expands down, followed by a range, followed by obviously news inflicted price action. But what is it showing? Expansion up, expansion down, expansion up, range, expansion, range, not really expansion, range. So I'm hoping you understand, how the markets are moving and why it's doing this. Range again. Okay, yeah, that is putting a new lower low there, so that is an expansion, that is a range. Okay, and I could just continue going on forever and ever, but you understand what's happening. And that's what I want you to do in your charts. Bit of homework, just go through it like I am, and do it for hours. Just do it. Well, you don't need to do hours because it is pretty straightforward, but just do it until you understand, this is how the markets move. And yeah, you'll start to see the markets, how they move. So let's get into the demand zone now. Okay, so this is our example of demand. Okay, so exactly the same concept, just go in the opposite direction. So I'm going to zoom right in and just look at price. So if I look at price, we have a high here, we then have price coming down, and then we have the range. That is the range, and I want to mark on that high, okay, because you can see the move that caused that high to be broken was not this. So if you're looking at this as the expansion, remember, if our expansion doesn't cause a break, and if we have, say, lower low, lower higher, lower low, lower higher, lower low, and then we have price pulling back, and let's say we have an expansion down here, that is an expansion. Notice how it hasn't broken structure, so it's not really relevant. It's just not caused anything to happen. So for us to trade that as a POI from when momentum steps in does not make sense, because it's not going to mean anything. That's what we have here, where we've got one expansion candle up, and yes, it does come back into where momentum kicked in, but we need to see our expansions sort of cause a break and a shift in market structure, and that's what we have coming up. So we've got a range here, so we've got 1, 2, 3, 4, 5 candles as the range, and then expansion, and it has caused a break of structure. Let me just mark that on. Remember, BOS, it equals break of structure. Okay, so what we can see, expansion, range. Remember the rules. Where do we want to be looking for our POI before momentum kicked in. So the last sell candle was there, area of demand. Now I would take it a step further and say, right, that has now been mitigated, and don't worry, I'll get into that, what that means, but that has been mitigated because the wick here has come back into it. So what I would do is take it a step further and look to trade this new area which has been left to mitigate. Okay, so expansion up, and we have, you might be looking at that as wick and a wick there, but it is still showing momentum up because it's closed here. Then we've had another bullish candle close, so I will be looking at trading from this area, and again lower time frames to sort of work out my entry. I wouldn't be just simply looking on this time frame to be trading that. I will be refining. That's why we use these lower time frames, so we can refine. But let's see what happens and see if we get a nice tap in. And one thing to note that I didn't actually mention, obviously the high of the range is here and the low is there. So what price could do is just come into the range, which I can mark on different color as the high and the low, or so you can see, look here, price comes into the range and it's sort of pushing off. But for me and how I trade, I would be looking to refine always and looking to trade there. Okay, so we can see we tap in, and if we look at this wick, okay, that comes in, that would be showing us this same concept of a bullish breaker structure on a lower time frame. Now I won't get too deep into that because this video is just expansion ranges, but that is for a later video. Okay, wicks do paint a story, and we will get into that. But we can see that we tap in, we would have entries in here, and what we've basically had is this is the range, that is the expansion, this is the corrective phase. So what's going to be next? Maybe a range and expansion, possibly. So we're ranging and we've expanded, and that's it. So we've now took out the high, and yeah, so we've expanded up, and it's likely now we're going to be retracing back. We've got a new range, a high and a low to the range, which is here. We could come into mitigate and then continue and just keep doing the same thing. So we can see that's what the price does. Okay, so if we was looking to refine like we did here, then we wouldn't have got a tap in, and sometimes that will happen where price won't tap into our refined area of demand. It will just go from the range, which would be, in this case, that's the high and that's the low. So you can see price comes into that into the range, and it more than likely done so because it had a low here to liquidate or to sweep. But you know, like I said, go through this on your charts, really try and put some hours into this, and you know, you'll really start to understand the markets from a different perspective. And yeah, in the next video we're going to be, you know, continuing on with supply and demand, but we're going to take it a step further and look at candles in particular, buy candles, sell candles, supply and demand, flips. Okay, so what I mean by flips is if we have price in a bearish market moving from lower low to lower high and moving from supply zones like this, this is, you know, we have supply here, this is unsustainable for price to continue doing this forever. So what will happen from time to time, or sorry, eventually, is price will foul supply, as you can see here, and then as price has fouled supply, what has actually happened, we've created demand, and that will be a flip. Okay, sorry. so then we can then adapt to the market and then trade that. But that will be covered in later videos, and we'll go through some examples of that as well.